Hello, good morning. Welcome to today's update. The thing I'm going to emphasise today is how it's important trading historically, or even to a certain extent intraday, that you wait for the close of the time frame that you're interested in. Obviously, with stocks, much more interested historically. So this is the daily S&P futures, and we had a typical seems to happen once every 2 or 3 months, where everyone heads for the exit at the same day, at the same time, but it's where we actually close, and some of these one-day moves have just not been sustained, and we can see a few of them in the more recent past. And there was one yesterday, so it was pretty weak early, but recovered strongly. Important to note that the Nasdaq did hold a key level, and the Dow never hit support. So while it was easy to get a little bit caught up in the moment, we never really took out anything meaningful. And you can see here 62.36 was the Nasdaq. I think the low was 44, so we got pretty close to it. It has produced a UFO, but it's not a powerful one by any stretch of the imagination, and is very much different from the exhaustion top that I called on the DAX a few days ago, and how I quantified that. So DAX was definitely the poor relation. We had a slam dunk signal, close way below 3 down, having had that UFO that had the expansion of range earlier on in the week. So difference might be marking the bar in the same way with the same hieroglyphic, doesn't necessarily mean the same. A lot of stuff talked about gaps. We was talk about gaps retrospectively. It was a breakout, it was a continuation of exhaustion. Just not much use really. You need to know what it is at the time. And the reason why I called it an exhaustion gap was because of this red line here. So it moved to the top, and then we just gapped above and immediately rejected it on that day. And the reason why I've called it an exhaustion gap is because this half-day level, if I scrunch this chart up, goes all the way back to the beginning of September. So all of that rally, all of those reactions back down on a half-day basis were not important until suddenly we jumped. So the longer the line stays the same and the bigger the jump, the more significant it is, and that's what told me that it was an exhaustion gap. Otherwise I would have said, well, it could be anything, don't really know. We haven't taken out the final support, which is 13,066. If I go to the daily chart, we've got this big original monthly level at 12,935. Still 200 points away, over 200. But the DAX is definitely the poor relation. If stocks recover, then obviously that's bad for bonds. We talked about the negative signal on T-bonds on Wednesday, just ahead of that powerful weekly level. Bonds were actually weak anyway, regardless of equities, and are down again overnight. So equities recover, bonds down. Bonds were actually weak, even when equities were doing okay. So looks like we're in this rotation mode. We also outed the dollar index yesterday, so that was a position that was taken on payroll. It's not saying a lot on the daily chart, but if I move to the intraday chart, understand why traders got out. We had the payroll number, so we had this rally, and then we've not really got anywhere. Support moved up to 94.60. We took it out, not really in the true dollar time of day, and then when we recovered, that was an opportunity to say, okay, this trade has not developed, we can get out at the price we entered, which was 93.70. I think we topped out at 73.5, so it was a good move to get out. 94.11 is pretty pivotal, but we've now gone a week since payroll and the dollar has not extended at all. Final one is just the Australian dollar. I'm going to have to go to the futures on this because there's some data feed problems with CQG on foreign exchange this morning. Price has condensed. It's been pretty quiet. We've been ambling sideways. We held a support point to the tick earlier on in the week, so we only have one final third of the position left. The stop is unchanged. So important for equities today. The Bods buy on dips were rewarded again. So have to see how they get on a weekly basis. I think it's, get my big figure right, 25.73.50 is the key level on the E-mini this afternoon, and we'll be watching that. Okay, have a good